Welcome to Future Business School. Today we're diving into the fascinating world of gold buying by the Reserve Bank of India, or RBI. Why does the RBI buy gold? What does it mean for our economy? And most importantly, how does it affect you and me? Let's break it down step by step, keeping things simple and easy to understand. Gold buying by central banks, like the RBI, means these institutions purchase gold as part of their foreign exchange reserves. Foreign exchange reserves are assets held in foreign currencies, bonds, and precious metals like gold. For the RBI, gold serves as a safety net. Unlike paper money, gold has intrinsic value, meaning its worth doesn't depend on a specific currency or government. It's seen as a stable asset, especially during uncertain economic times.
Diversification of reserves. The RBI holds foreign exchange reserves mainly in US dollars, euros, and other currencies. However, currencies are subject to fluctuations in value. To minimize risks, the RBI diversifies its portfolio by adding gold, which tends to retain its value even during financial crises. Hedge against inflation. Gold is often called a hedge against inflation. When inflation rises, the value of paper money decreases. But gold's value usually increases, making it a reliable store of value for the long term. Global economic stability. The RBI buys gold to protect against uncertainties in the global economy. For instance, if major economies face a recession or a geopolitical crisis occurs, gold acts as a shield to stabilize reserves. Strengthening the rupee. Gold reserves can be used to boost the Indian rupee's credibility. When a country has strong reserves, international investors see it as economically stable, which benefits the currency's strength.
International markets. The RBI buys gold from international markets, often through over-the-counter transactions with other central banks or through institutions like the Bank for International Settlements, or BIS. Local gold markets. Sometimes the RBI procures gold from domestic markets. This also supports the Indian gold industry and reduces dependency on foreign sources.
The RBI keeps its gold reserves in two main locations. In India, a portion of gold is stored within the country in secure vaults. Abroad, the RBI also stores gold in international vaults, such as those in the Bank of England, for easy access during international transactions. As of recent data, the RBI holds around 795 tons of gold, making it one of the largest holders of gold among central banks globally. This accounts for roughly 7% of India's total foreign exchange reserves.
1. Economic stability. Gold reserves help stabilize the economy during global financial shocks or currency fluctuations. 2. Confidence in India's economy. Strong gold reserves instill confidence in India's economy among international investors and rating agencies. 3. Support for trade. Gold reserves can be used to settle trade payments, especially when currencies are under pressure.
While gold is a stable asset, it isn't completely risk-free. First, there's price volatility. Gold prices can fluctuate due to market dynamics, geopolitical events, or changes in global demand and supply. Second, there's the opportunity cost. The RBI invests in gold instead of other potentially higher-yielding assets. This trade-off is a calculated decision based on long-term stability.
India is not alone in buying gold. Central banks worldwide, including those in China, Russia, and the United States, also invest heavily in gold. In fact, gold buying by central banks has reached record levels globally in recent years, driven by economic uncertainties and a desire to diversify reserves. India ranks among the top 10 central banks globally in terms of gold reserves. This reflects the RBI's strategic approach to strengthening India's economic position. Historically, India has had a long-standing cultural and economic relationship with gold. For centuries, gold has been a symbol of wealth, prosperity, and security. The RBI's gold buying continues this tradition at a macroeconomic level, ensuring that India remains resilient in a changing global landscape. To sum up, the RBI's gold buying is a strategic move to secure India's economic future. By diversifying reserves, hedging against inflation, and strengthening the rupee, the RBI ensures stability and resilience for the country. For us as citizens, this means a stronger economy, greater financial security, and a better global standing for India. Stay tuned for more such informative content. Don't forget to like, share, and subscribe to Future Business School for more insights into economics and finance. See you in the next video.